You just missed the biggest wealth transfer in stock market history. Not because you did anything wrong, because by the time you were legally allowed to buy in, the money was already gone. I'm talking about SpaceX. This company just went public, biggest IPO ever recorded. And if you bought it thinking you finally got your shot at the next Amazon, I need to talk to you, because what actually happened here is way uglier than it looks. Let's rewind first, because you need to see the full setup to understand how badly regular people got played. Back in 2008, SpaceX was basically dead. 3 rocket launches blew up in a row. Elon Musk was down to his last few $1 million, no joke. By 2015, Google and Fidelity threw $900 million at the company, and that valued SpaceX at $12 billion. Big number, right? Here's the thing. That was just the beginning. Fast forward through the 2020s, and SpaceX kept doubling, tripling, quadrupling in value, all while staying completely private. By late 2025, secondary sales were pricing the company at around $800 billion. Nobody outside the accredited investor club could touch it. And then, in February 2026, Musk merged SpaceX with his AI company xAI, folding it into the same entity at a combined valuation north of $1 trillion. That deal alone should have been a headline for a week. It barely made a dent, because what came next was so much bigger. June 12, 2026, SpaceX finally goes public on the Nasdaq, ticker SpaceX. They priced shares at $135, raised $75 billion, valued the company at $1.75 trillion. Biggest IPO in the history of the stock market, bigger than Saudi Aramco, bigger than anything Wall Street had ever seen. And for one wild week, it looked like everyday investors finally got their golden ticket. Shares shot up to $225 within days. The company's market cap blew past $2 trillion. People were popping champagne, telling their friends they finally owned a piece of SpaceX. Here's where it turns into a horror movie. Because while retail investors were celebrating, the people who got their shares years ago, back when the valuation was $12 billion or $100 billion or $800 billion, they were already sitting on gains so massive it's hard to even wrap your head around. Venture capital firms, early employees, insiders who bought through those private tender offers I'm about to explain, they didn't wait for the public listing to get rich. They got rich while you were legally locked out. So how did they get locked out in the first place? One rule. It's called Regulation D from the SEC. It lets private companies sell stock without ever registering it publicly, as long as they sell to what's called an accredited investor. Translation, you need a net worth over $1 million, not counting your house, or you got to be pulling in over $200,000 a year for 2 years straight. Miss those numbers? You're out. That rule kept regular Americans out of SpaceX for almost 2 decades, while the company went from nothing to $2 trillion. And twice a year, SpaceX ran private tender offers, basically an auction where employees and early investors cashed out shares directly to giant firms like Andreessen Horowitz and Sequoia. Behind closed doors, zero public access. That's how the insiders built their fortunes long before you ever got a ticker symbol to type into your brokerage app. Now here's the part that should really make you mad. You finally got your legal shot on June 12th, and almost immediately the stock started falling. From that $225 high on June 16th, SpaceX has cratered. As of late July, it's trading around $112. That's not just off the highs, that's actually below the original $135 IPO price. We're talking a stock that's lost roughly 40 to 50% of its value in about 6 weeks. One report even said SpaceX lost the market cap equivalent of an entire Tesla in a single week. So think about the timeline here. Insiders built generational wealth for 18 years while you weren't allowed anywhere near this stock. Then, the second regular people were finally let in the door, the stock started bleeding. That's not a coincidence. That's the pattern. Private money gets the safe growth, public money gets the volatility. But wait, because it gets worse. There's a date circled on Wall Street's calendar right now, August 6, 2026. That's when the very first insider lockup expires, meaning all those early employees, executives, and venture capital firms who've been sitting on massive paper gains, they get legally allowed to start selling their shares onto the open market. Jim Cramer himself has been warning people to wait until after that date before buying in, because if insiders dump even a fraction of their shares, that could send the stock even lower. So let's be real about what's happening here. The everyday investor bought in at the top is underwater right now and might be about to get hit with a wave of insider selling in a few days. Meanwhile, there's already reporting on members of Congress and their families buying up SpaceX stock, which is raising some serious conflict of interest questions, considering SpaceX runs on billions in government contracts. You see the pattern? The rules were never actually written to protect you. They were written to control the timing, keep you out during the safe, explosive growth phase, let you in right as the volatility, the lockup expirations, and the insider selling pressure kick in. Here's the analogy that makes this click. Imagine you're invited to a poker game, but only after everyone else already saw the cards, made their bets, and won the pot. Then they hand you the deck and say, okay, your turn now. That's what just happened with the SpaceX IPO. Now look, I'm not telling you SpaceX is a bad company. Starlink's got over 9 million subscribers. NASA still depends on them for astronaut launches. The AI business through XAI is a real growth angle nobody's fully priced in yet. Some analysts, including one over at Deutsche Bank, still see serious upside from here, north of $250 a share. But here's what you need to actually understand before you put a single dollar into this stock. The lockout wasn't really about protecting you. It was about making sure the explosive, low-risk phase of growth stayed locked inside a private club, and the volatile, uncertain phase got handed to the public on schedule. So if you're thinking about buying SpaceX, don't do it because you're scared of missing out again. Do it with your eyes open. Watch what happens after August 6th. Watch how the stock reacts when insiders get their first real chance to sell. That's going to tell you more about this company's future than anything from IPO day ever did. The lockout is over, but the game Wall Street has been playing this whole time, that's just getting started. Subscribe, because I'm going to be breaking down exactly what happens on August 6th the second it drops. And trust me, you don't want to find out after everyone else already made their move.